Hey guys, welcome back to my channel McNallie Money, home of all things stock, investment, and personal finance related. Today we're going to be taking a look at a penny stock that operates in the Canadian MJ space, and this one's really exciting because I actually didn't know about this company, and a subscriber recommended that I take a look. So I've dug in, I've done some due diligence, and I wanted to share what I found with you guys. So before we get into the video, please take a second to like and subscribe to the channel if you haven't already. Let me know in the comment section below if there's any stocks you want me to look into or if you're personally holding Auxly yourself. And without further ado, let's jump right in.
So that's right. Today, guys, we're going to be talking about Auxly Cannabis Group. Now, this is a company that I don't currently hold, and it's exciting because this was actually recommended by a viewer on the channel, and they'd requested that I dig into this one. So this was new to me. I've actually looked through this company in some depth, and it is quite interesting. There's a lot to unpack with this one. So we're going to go through kind of the company analysis, what they do in a similar fashion to some of the other videos. They are broken up into a number of different business units, so we're going to talk about each one of the core units, and then we'll look at some financials and actually compare this company to some of the ones that I do own, and let you guys know where I think this kind of stacks up in terms of the value proposition. Now, before we get into the actual company, I wanted to take a quick look at the chart. So this is as of close last week. They closed at 34 cents. They were down 5% on the day. And the number that's important here is market cap. So I really like to compare market caps when I'm looking at companies. As you probably know, the price of the stock doesn't really indicate the value of the company. It really comes down to how many shares are outstanding on the market. So whenever I'm comparing companies, I really like to look at market cap. And you can see this one sitting at about $250 million. So $253 million, which is very similar to like a WeedMD, a Tilt, or a Valence that we've talked about here on the channel recently. So keep that in mind as we go through the analysis, and we're actually going to compare it to one of those companies towards the end of the video to see which one I think is kind of a better bang for your buck. But keep that number in mind. So about $250 million. You can see here, if we scroll down the page, they've actually missed earnings estimates the last couple of times, and they are showing a pretty big loss, which is actually increasing in value over the last couple of years. Now, this isn't too concerning as it's a startup, and obviously a lot of companies need to spend money in order to make money, but it is something to be aware of. You can see here over the last 6 months, they were trading as low as about 12 cents, and they have run up now to the mid 30s. So if you were able to get in maybe in September, November, that type of thing, you'd probably be pretty happy with this position right now. So as mentioned in the open, there's a lot to this company, and it actually took me quite a while to really understand what they do. They have multiple divisions that are wholly owned. They have subsidiaries, they have joint ventures, they have partnerships, they have leasing agreements, they have licensing. So we're going to try and understand this in the next maybe 20 minutes or so, but there's definitely a lot here. So to kick it off, Auxly is a consumer packaged goods company in the MJ products market, dedicated to bringing safe, innovative, effective, and high quality MJ products to the medical, wellness, and recreational markets. So they do serve a number of the markets similar to like a WeedMD. We've established an experienced team of professionals from multiple disciplines, including clinical and scientific research, product development, fast-moving consumer goods. We've partnered with industry leaders and are developing assets to create trusted products and brands in an expanding global market. So a few words to keep in mind there: global market, so they're definitely eyeing up expansion internationally. They've partnered with industry leaders, so that's what we're going to talk about in a lot of these strategic investments. And then clinical and scientific research. So they actually do have a couple laboratory type of divisions, and we'll talk about those briefly. That honestly won't be the real meat and potatoes of this video, but it is worth mentioning. So if we now scroll down the page, you can see here, these are their subsidiaries. So we're going to talk about 4 of these, but Collab Project, Robinsons, Dosecan, KGK Science, and Averil. Now moving along here, you can see the 2 divisions that are involved in product development or kind of R&D type of things are Dosecan. So they have a 52,000 square foot facility in Prince Edward Island. And then in addition to that, they have KGK Science, which is a wholly owned subsidiary, and they're actually involved in the research side of things here, so for cannabinoid and animal products in recent years. Now in terms of their actual brands, they really have 4 that we're going to spend some time on in this video. So Dosecan, Project Collab, Robinsons, and then 4A. And we're going to go into each one of these individual websites in a second here, but I did want to introduce them on this slide. And in addition to all these areas of their business, they also have a number of strategic partnerships. So we're not going to talk about these too in depth, but essentially these are companies that they've partnered with in some form or fashion to mutually benefit both parties. So you can see here Imperial Brands has actually granted Auxly a global license to their vaping technology. Capsugel has actually provided Dosecan with complete line of equipment for filling capsules, sealing, and state-of-the-art MJ capsule products. Inner Spirit is actually the parent company of Spirit Leaf Retail, so this is an MJ retailer, and Auxly actually owns about 15% stake in their company in terms of shares outstanding. And we'll look at this in a little bit more detail towards the end of the presentation. Kindred is involved in the beverage space, and they actually supply their brokerage service to Auxly. And Nature's Crops is a vertically integrated grower involved in specialty oils space, and they've actually patented this ahi flower technology that Dosecan has the exclusive global rights to. Now, as promised, where we're going to spend the bulk of time in this video is actually on the four main product categories that were described in the previous slide there. So Dosecan is the first one up. Now, I'll give you a quick summary and then we'll go into the website for each one of these four companies or subsidiaries. Dosecan is a clinical wellness brand built on the pillars of quality, efficacy, and safety. So this is actually kind of on the medical side of things, and they're looking to leverage science and advanced research to really drive that product development cycle. Next on the list is Robinsons Canada. So this is actually a producer division. Robinsons is a premier producer of fine crafted cannabis, hand tended and cultivated in the heart of Annapolis Valley, Nova Scotia. So this is very high-end cultivation. Collab projects. So this one's focused on art, design, and culture. Mission to provide Canadians with carefully curated selection of exceptional MJ products. So again, they're going for that very high-end, top shelf kind of experience. And then finally is 4A. So 4A is involved in the vaping industry, and they really strive to be an accessible entry point for anybody at any stage of their MJ journey. So this is actually kind of on the other end of the spectrum, people who are maybe just getting involved with MJ and want a nice way to educate themselves or really step into this community. So now we're going to take a quick look at each one of these four divisions websites and kind of the look and the feel of their products. As mentioned in previous videos, I think it's really important to actually go in and see what the end customer is looking at, especially when companies like this are kind of split up and they have a variety of different brands or product lines. I think it's important to see how they maybe complement or contrast each other. So Dosecan here, you can see again, this is kind of the medical side of the company. So they really focus on the CBD oils and concentrates. And you can see here, this is that ahi flower oil that Nature's Crops granted the exclusive rights to. And this is what they pair with their CBD and their other oils to really give that enhanced experience. And they compare it to like a flaxseed or a fish oil and actually say that it's superior to those. So moving along now, here's the Robinsons MJ. So this is hand tended and cultivated in Annapolis Valley, Nova Scotia. So you can see here, even the seeds come from a renowned seed bank. They're high quality with unparalleled taste, aroma, and appearance. Small batch, precision grown by design with climate controlled drying and sealed for freshness. So if you look at their actual product line, you can see here, this is the traditional flower. It comes in different varieties of strains and sizes. So for example, this is a 3.5 gram canister here. And then again, similar to some of the other videos, you can really see all the different flavor profiles and intensities listed here. So the next division is Collab Project, and this is the one that uses the carefully curated product lineup to serve Canadians. So you can see here, they have a little bit more widespread product offering. So they offer everything from vapes to pre-rolls to edible to the dried flower itself, similar to Robinsons. So if we scroll down on their page, you can see here the different vape products they offer. Then you get into the pre-rolls and again, all the different strains that they offer within this subcategory. And they're also involved in the edible space. So you can see here they have different chocolates available, soft chews or gummies, and then finally the traditional dried flower. So again, it really depends how you like to ingest or use this product, but Collab really tries to offer a variety or a range of products to meet customer needs. So finally is Foray. This is the most similar to probably the collab project. You can see here they have fruit gummies, they have vapes, they have a variety of different products, but this one's really going for kind of the entry level into this market. So you can see here the chocolates coming up. Now on this page, what I wanted to show you guys is actually where they're available. So if you click here on the stock list, you can see that they have hundreds of retailers across Canada. So in Alberta alone, there's over 282 retailers that carry Foray products. And this is important when we start getting into the financials here. You'll see some of the recognition that this company has received in 2020, and I really think it's due to this very vast distribution network. And you can see in other provinces as well, British Columbia, Manitoba, Ontario, Saskatchewan, they do have a strong presence. Obviously more focused in the west here. Ontario is the biggest province by population, but you can see here a lot of their activities focused in Alberta and British Columbia. So that's kind of a high level view of the four key or core components of this company, and I wanted to really take a second to go through each one, not in a lot of detail, but just so you guys could see the variety of what this company does. They really do span a lot of different product categories and areas of this industry. And as I was doing my research, I initially felt like they were a little bit scrambled or kind of spread too thin. But the more I think about it, the diversified approach is very smart in this type of an industry because the industry is in such an early stage. We really don't know what part or what section is going to be the most profitable, and companies like Auxly that kind of have their hand in everything really set themselves up down the road to expand verticals or really move quickly as the market changes and kind of evolves to meet customer demands. So now that we kind of understand what Auxly does and their different business units or divisions, I wanted to share with you guys a couple of articles that I found during my research that I thought were pretty interesting. So the first one here is that Auxly announces strategic expansion into MJ 1.0. So you can see here there's three main pieces to this article. Number one, they're expanding their flower offering under the collab project. They're launching a new Auxly's Back 40 brand, and then they're significantly boosting their pre-roll capacity through custom-built automated process for both the collab and Back 40 brands. And the reason this article was interesting is a lot of companies in this space are really talking about MJ 2.0 or 3.0, which are the derivative products. But it was interesting to see that Auxly really has found a niche with the traditional flower or pre-rolls, and I think a lot of that is to do with the quality of the product that they offer. This is really curated, hand-picked stuff, and I think there is definitely a market for that. Even if a lot of companies are focused on some of the other areas of the industry, I think it's interesting that Auxly has really found a niche here and has decided to expand further. This article came out only in February, so this is a recent development, and this one really caught my eye. As I was reading this article, they also have a hyperlink here talking about their market share or their position as number one in Canada for MJ 2.0 products. So I opened this one up as well, and this one was really impressive. So you can see here 2020 was the first full year in Canada for MJ 2.0 products. So these are essentially vapes, edibles, beverages, extracts, topicals, stuff like that. So again, derivatives of the flower itself. And although Auxly did not participate in every 2.0 category, so they didn't have products in all of these different areas, they actually took 19.2% share of the total vape market and 12% share of the total edibles market in Canada. So that actually propelled them to the number one spot overall for sales of 2.0, which I think is extremely impressive. And they've actually now seen 23% market share in the national vape market in fourth quarter. And this is the biggest category within MJ 2.0. So it's really encouraging to see that whether they're talking the top end or entry level, this company is really positioning a product that people want, and there's a high level of demand for it. Now, they also call out a couple other operational highlights for 2020 in this article, so I'll talk through these quickly. So you can see here they're one of the first LPs or licensed producers to market with 2.0 products. They initially shipped to 9 provinces, so again, they're really covering Canada pretty holistically at this point. We talked about their number one position in terms of vape sales coming in at 23% of the market share. They successfully completed second floor expansion at their Dosecan facility in PEI. So this enables faster production rates and fulfillment at this facility. They introduced a number of new products. So we talked about the Back 40 brand. They also had hard maple candies, capsules, cherry cola pop milk chocolates, and a number of vape cartridges and different terpene series. Then again, they refer to the last article in terms of MJ 1.0 with their expansion of premium dried flower and different collaborations that they're working on. And finally, finally, they actually received their cultivation license for their first phase of their greenhouse project at one of their joint venture firms. So next up, I wanted to get into the numbers here. We've looked at the company overall, we've talked about some of the highlights and the recent news articles, but really the proof is in the pudding here, and I wanted to go in and take a look at the numbers themselves because these really don't lie. So this is for Q3, which came out in late November, and similar to some of the other companies we've been talking about, year-end and Q4 should be out at any point now. But in terms of Q3 results, you can see here revenue came in at 15 million, and for the 9-month period it came in at 34 million. So if we were to extrapolate this out based on Q3 numbers, 15 million a quarter is about 60 million a year. And remember, their market cap's about 250 million. So they're trading about 4 times annual revenue, which isn't too expensive at this point, but you definitely can see down here where the losses start coming into play. I showed you guys that they had missed earnings forecasts the last couple of quarters, and they had started to record some pretty reasonable sized losses. So you can see here 17, nearly $18 million loss for the quarter and 61 million for the 9-month period. So they're definitely burning through a lot of money. And that is what scares me about a company like this that really has a lot of diversity in terms of their product offering. If you think about maybe on the tech side, some of the big giants like Apple or Amazon or something like that, they really made their name with one key product like the iPhone. And then they start to branch out into other areas like the MacBook or AirPods or something like that. And I personally think that's, I don't want to say a better, but maybe a more safe approach to this. If you try and do everything out of the gate, it's very expensive and it's very difficult to master all the different disciplines. Whereas if you specialize in one area, really get a strong reputation, name brand, you're starting to make some money, then you can branch out into these other divisions and it's not as risky to the shareholder and to the company overall. So not saying that this approach is bad, I just definitely think it's going to be expensive and it's risky because they've got to execute and deliver on a high level in a number of different areas in order for this company to become profitable and ultimately come out on top in each of these different verticals. So I did want to compare Auxly to one of my other MJ holdings because they're very similar market cap, and I wanted to give you guys a sense of kind of the revenue to market cap value of some of the positions that I currently hold in my portfolio. So the one I wanted to compare to is Tilt Holdings, and the reason I picked this is because Tilt also has a variety of different segments or divisions, so they're kind of diversified like an Auxly, and you can see their market cap's about 225 million, so very similar size to Auxly, about $250 million. And I pulled up their Q3 report, so they've actually come out with year-end already, but I wanted to compare Q3 to Q3, and you can see here they came out in November as well, just for an apples to apples comparison. So if you remember, Auxly did about 15 million for the quarter and about 34 million for the 9-month period. You can see here that Tilt actually did 40 million for the quarter. Very similar gross margin, so Auxly was just under 30%, Tilt's just over. And if you scroll down here and look at the actual 9-month period, you can see that Tilt did 121 million compared to Auxly's 34. So they're doing about 4 times the revenue. And in terms of market cap, if we were to extrapolate out Q3 results, similar to what we did with Auxly, Tilt would be making about $160 million a year in revenue. They're trading at 225 million market cap. So they're trading about 1.4 times earnings in terms of earnings to market cap, whereas Auxly's up near 4. And this is really how I like to start to compare companies when I'm looking to enter a position. Not that everything's equal between the two, but it gives you a rough idea of kind of bang for your buck or value. And from this initial analysis, I would definitely say Tilt is more interesting or compelling to me as an investor. Number one, based on valuation, and number two, because they've got a lot more exposure into the United States. A lot of what Auxly does, we saw they're well diversified across Canada. It didn't necessarily talk a lot about US expansion, aside from that initial introductory slide. Now, one of the final things I wanted to point out, I just mentioned that obviously Tilt and Auxly are not the same company and they've got a lot of different things going on. This is an example of what Auxly has that maybe Tilt doesn't. So they've actually got a number of strategic investments, whether it's through shares, options, or warrants in other companies. So you can see here Inner Spirit, that's the one that they own about 15% of the company. They're also involved in Vivo, Lotus, 1.5, Delta 9, Goodleaf, Ascent Industries, and a number of other smaller MJ brands. So I definitely think this is interesting because, again, when you talk about spreading out the risk, Auxly really has its fingers in a lot of pies. So if any of these subsidiaries or the companies that they have strategic investments really take off, that's definitely going to help Auxly's market cap and share price as well. Now the catch-22 with this is these companies can go up or down. So you can see here in terms of fair value change, most of their investments this year actually lost money. And this is the problem with this strategy is when you're heavily diversified but it's all within one industry, if the industry itself is struggling or not doing so well, you're going to get hit across the board. And this is exactly what we've seen here. So they are diversified. They have their hands in a lot of pies in the MJ space, but the MJ space overall in terms of the last couple of years has really struggled, and they've seen a fair value decline in almost all of their investments with the exception of maybe one or two. So as I was doing my research, I also checked out some of the forums that discussed Auxly, and this was another concern that was brought up by a lot of investors. So they have diluted their shares a lot recently. We're going to share an example of this on our final slide, but I wanted to show you guys what they've done over the past 9 months. So this again is from that September 30th Q3 earnings report, but they actually closed 5 rounds of financing, and you can see here the conversion price of these rounds. So it ranges really from around 44 cents into the 30s. The most recent one here, September 2020, was actually down at 18 cents. So they're really trying to raise a lot of money. And this is good in the sense that people are willing to invest and give them this money, but it's bad in the sense that they're going through a lot of capital and they're really diluting their share count for existing shareholders. And I think this is a direct reflection of that cash burn or the loss that we saw on the income statement, because this company has so much going on. It's a lot of overhead and it's very expensive to keep the lights on at all these different divisions. So again, this is not a deal breaker, but I wanted to share it with you because this is definitely excessive for any of the companies that I've seen. And kind of a continuation on that, you can see here just recently in February of 2021, they closed an additional $20 million round. This one was at 37 cents per unit. And again, you can see this added an additional 54 million shares into the market. So for anyone who is currently holding Auxly in their portfolio, that dilution is going to hurt them. And a final point on here, if you look at the price of this raise, it was valued at 37 cents per share. This was in February, so not even a month ago. In my mind, that's essentially fair value or very close to it of this company. So if we now jump back to their actual chart, you can see here they're trading at 34 cents. The raise was done at 37. So I definitely don't see a ton of upside potential at this current valuation or share price. But that being said, things could change rapidly as the industry evolves and as some of these different divisions start to come online and see results. So in summary, you guys, I don't think I'm going to be investing in Auxly at this point. I personally feel like they're burning too much money. They've got their business spread out in too many different divisions, and it's really not focused enough for me. And I feel like they're going to struggle as companies that maybe have more attention on specific verticals start to compete with them and maybe outpace them. It's kind of the jack of all trades scenario. I think Auxly is good in a lot of areas, but I'm unsure if they're going to break out and really be great enough in some of these divisions to make this company profitable over the long term. So that's it for today's video, you guys. I hope this opened your eyes to a potential penny stock in this MJ space in Canada. As always, feel free to leave a comment below and let me know what you think of the analysis, if you agree or disagree, and if you currently hold Auxly. If you haven't, please make sure you like the video, share with a friend if you know they're interested in this company, and subscribe to the channel if you haven't already. And as always, have a great rest of your day.